if Nvidia is making so much money from the design of the chips, because that's mostly what they focus on, what happens when TSMC is like, okay, I want a bigger piece of the pie, right? And they're going to take it from who? From Nvidia. And they're going to say, okay, I'm making the chips. You're going to have to pay me more. You're going to have to pay me more.
I remember that there was the same skepticism around the same period last year, where we were saying, okay, the stock is up now 200%. It's time for it to cool down, and it's unlikely that it will increase again 200%.
The risk of seeing someone catching up is always there with whatever the industry, but I think in the short term, let's say the next 12 months, I don't see anybody catching up.
Today in Market Buzz, we're going to be going over the Nvidia results and seeing whether should you buy more? Should you sell? Can you still buy Bitcoin? We'll figure it out all in today's episode, so stay tuned. All right, so starting simple and easy. Dimitris, what was the results of Nvidia? Because I know you were paying attention.
So the earnings per share estimated was supposed to be 74 cents per share, and it came out at 81. Revenue was 35. Am I correct?
35.1, and then it was expected at 32.5. So
it was, so what I found interesting, it was the Q3 surprise of earnings per share. It was larger than the surprise of Q2, which that wasn't expected. Everybody expected the growth as far earnings to start slowing down as the market expectations are catching up with Nvidia. But it was larger than Q2. Data center, 30 billion revenue, which is like most of its business. Gaming, 3.3, and the outlook for Q4 is 37 billion. So they show a strong outlook, and that kept the stock somehow above the 140 level after the report in the after hours.
Yeah, Akim, so you had something to say there.
All in all, I would say it was quite a good release, right? Quite strong earnings. The beat's a 10% beat. It's better than the previous quarter. I'm a little bit puzzled, though, why the stock is flat. I think at this point, the market is just expecting that Nvidia just completely smashes earnings. Otherwise, it's not interesting, right? And I found this really a bit puzzling. What do you guys think? Why would it be flat? I mean, when any other company, if I see those earnings, I'm gonna buy, right? And the whole market would be buying now the stock. And
I have an idea.
Yeah, go ahead.
I have an idea why the stock is flat. It's $3.6 trillion market cap with a 35 billion revenue, and Microsoft has like a 65 billion revenue. I'm talking about per quarter. Nvidia being the largest company by market cap doesn't help their case to go further up from here, because people are just trying to justify it. Because someone has to come and keep buying from here for the stock to go further up. And everybody is thinking what we are thinking. How long can this thing go? I know the AI story is not done, and I know they're going to further increase their earnings, but you have to compare with number 2 and number 3. And number 3 is Apple. They have like 125 billion in revenue per quarter, and Microsoft have 65, and they have 35. So they're doing more with less, and how much more they can go with just 35 billion in revenue, especially when it's like everything is tied to AI. So if AI goes away, everything comes crumble. But Apple has, they have the phones, and they have the Apple Store, and they have this and that. They are more diversified. That's just my opinion. I don't know what you guys think.
Yeah.
For me, the Nvidia. Akim, go.
No, I actually just had prepared some charts that I found interesting. So the stock is up 200% this year. Last year, I believe it was also up 200% or maybe a little bit more, right? I remember that there was the same skepticism around the same period last year, where we were saying, okay, the stock is up now 200%. It's time for it to cool down, and it's unlikely that it will increase again 200%. And then this year again 200% year to date. We are saying, when I say we, it's the market is saying again, I'm not sure that next year it will perform again very well. But let me just share my screen. I want to show you a couple charts that I prepared. So that's the stock price. The last 5 years, it went just absolutely parabolic. Huh? You can see it. It's like a 2,700% in 5 years, with the biggest chunk in the last 2 years. But interestingly,
Yes.
despite this stock price, the valuation became cheaper. And this is just unbelievable. So I prepared here a little chart. In blue, you can see the forward PE in blue, the forward price to earnings. You can see that we're on the lower range, actually, from the last decade. We're on the lower range of the forward PE. We're below or around 40 times price to earnings. But there were numerous times where it was trading at 45, 50, and above that. And same for the trailing last 12 month trailing earnings. Price to earnings, we're also on the lower end in the 50, 60 range. So by all means, the stock is in the cheaper range, and that, as the revenue continues growing and the growth is just incredible and is higher than we had 5 years ago. It is estimated that here, I actually prepared another table. Sorry, I'm coming out with the boring stuff. But you can see here the revenue estimates annual in billion. This was by January of last year, right? So that was for the period of 2023, 59 billion. This year, Nvidia is going probably to close around 130 billion per year. Next year, probably close to 200 billion. 2027, maybe 230 billion, maybe a lot higher. Nvidia is what I found interesting, and maybe I took too much time now, but what I found interesting is the management of Nvidia in this earnings release. They were somewhat conservative, but I don't think they're less optimistic about the company. I think they're just trying to build some kind of soft landing for their shareholders, because the market has just been crazy and crazy.
Ooh, Akim, just to let you know, apparently your recording has failed. I'm guessing it's because, like,
What happened?
yeah, right now the computer is asking for a lot because it's making the recording and stuff. Akim, you there?
I was hearing
Okay.
him just fine until you said that it was failing, and then it just failed.
Huh. No, like that was the thing. Okay, there he is.
Very good.
So did it kick you out?
Yeah, it kicked me out after you said the
Okay.
recording has failed.
So it just popped off a thingy that says the recording was about to fail. So it recorded to that point, I think, because the thing is, like you're doing the streaming of the data. Your computer is recording audio. The video is encoding the video and all that stuff. So
Yeah.
let's see what happens. I think that should fix it. That should
Okay.
fix it now.
Okay.
So okay, let's hope.
So I basically said, like so just, and Nestor, you can take it from here. I was basically saying, so the valuation now, I think, is at a reasonable level. And from here on, the growth rate in the earnings will be reflected in the stock price earnings. So if the earnings grow 30% next year, the stock price will increase 30%. In my opinion, there's less speculation now. And when I say speculation, is both on the good side and bad side of, the buying or selling the stock. I think management we have now some kind of soft landing in the stock, and now the valuation is again connected to the earnings.
Yeah.
Yeah.
Like I agree with you on the fact that the stock is currently sitting at very appealing levels, and I think within proper valuation, right? Because we also have to consider the fact that the stock did go up a lot last earnings, and the level of which I think the peak of last earnings was sitting around 140, 145. And then we saw that dump all the way to the 90s. We make the stock a gift, you know? And then obviously we came back to those levels, but we now are a quarter into, one more quarter of data and one more quarter of selling and one more quarter of market share. So that's where it becomes super interesting. But again, we have to take into consideration the fact that this stock has had such euphoria, as you showed in the chart. We're almost parabolic. And I think we have a little bit more to run, given what they said in their earnings call, because I agree with Jensen when he says there is $1 trillion right now worth of data centers that have to be rebuilt for what he calls software 2.0. Right? Let me show you a chart this time, Now that we're bringing charts into the table, I got to have a chart on my own. And this one is interesting because it gives an idea of what Wall Street is expecting in terms of the revenue growth that we're seeing with Nvidia, right? Now, what am I showing you guys here is pretty much the expected revenues of Nvidia heading forward, right? And we saw that the company guided 37.5 billion, right? But the range of Wall Street, which is where the euphoria and the anticipation of the stock comes in, and the reason it doesn't do so well after earnings is because the expectations are just way too high. Wall Street was expecting a range between 35.7, which was on the low end of expectations, and on the high end, it was sitting at $42 billion. So we're expecting a growth for this, like the market seems to be expecting a growth of this company of billions and billions and billions of dollars every single quarter. And then if we go back to the next quarter, right, which like sitting somewhere in the 40 range or 42 range, like a potential of 47, even going further. And then we're talking about 53 billion in the high end, and then 60 billion. So they're thinking like the idea of the Wall Street investor in this case is that, hey, they're just gonna magically have chip machines. TSMC is just gonna build 1,000 chip machines, and we're just gonna be producing all of the resources in the world in just chips. When in the reality, it takes time. It takes time for the development of the chip, the infrastructure to supply those chips, right? So we got to take that into consideration, right? And then that's where Wall Street sort of comes in and says, oh no, like it didn't do well enough. Like we're expecting so much more growth, but it's like they said it in the call. They're having supply chain constraints. They can't get enough materials. They can't get enough like actual manufacturing. They are sold out 12 months in advance. So everything they have, it's sold.
Yeah, but you're talking about all those constraints, right, in the supply chain. But I actually think it's a positive thing. It's a marketing thing because it basically means that the company is so good, it's just not able to deliver enough, right? I mean, to produce enough of its stuff, right? This is something
They're
that's
giving you
just
as
amazing.
much as they can.
And as an investor in your
they're giving
portfolio,
you.
I think you have to have those companies that they have just so much demand. They have demand that goes maybe well into the next 10 years based on the orders that they have probably of the chips they're producing. And I think this is the type of company you want to have in your portfolio with some kind of overweight. And there are not that many companies out there that have this. There is Nvidia. There's also Airbus. I want to mention Airbus, and I will bridge between the two. But basically, Airbus has so many orders for planes, but not just for planes, also for defense from the European governments. They're preparing for, Trump withdrawing from Europe, and Airbus is just flooded with demand and is not able to produce enough. So this kind of companies, I think they must have in your portfolio because they will continue growing, and it all depends on how they ramp up their production.
Yeah.
I mean, I don't like whatever you guys both said, with the chart that you guys showed, this is like absolutely like it makes sense. So the numbers are there. The case is supporting the numbers and the expectations. What I'm finding, the risk that I'm finding is that for the institutional investor to justify buying a company at 3.6 trillion, that could be 4 trillion next quarter or 4.5 in a couple of quarters. And basically a company that's selling something that we haven't seen. It's not like an iPhone. I can't walk into an Apple store and see whatever they're selling. They're selling a chip that they tell us, they put them somewhere and they do something. Okay? So and then I think it's the market cap. If it was like number 10 in the top 10 of the most valuable companies in the world, okay, it could grow 200%, no problem. But because it occupies the top spot, that's where the mental wall is going to.
That's a psychological argument. So once this is breached, there's no more cap, right, to the stock. It's a bit like, it reminds me of the 100K of Bitcoin. We're at 99K now, since yesterday. And we're crawling to 100K, but we're just not going to 100K. Dimitri, you're making a fantastic point. it's difficult for someone to buy. Let's continue on the Bitcoin analogy, to buy Bitcoin at 99K because you know that a lot of people will sell at 100K, right? And maybe it's the same with
Hmm.
Nvidia. Nvidia is top one, market cap above 3 trillion. So, right, it feels heavy. Like you don't know if you want to buy it, even though it's a fantastic company. And in my opinion, it will go to 5 trillion market cap in next 2, 3 years. I don't see a problem with it going to 5 trillion. But we have this
I believe it.
psychological barrier, as you mentioned.
I believe it too. And Nvidia has a history of losing 50% of its value, like every few years. Do
Do you
you
think it
want
could
to?
happen again?
And now it's in,
What could cause it to
absolutely
happen
can happen.
again? What
I mean,
factor could
a bear
cause it
market,
to?
bear market can bring it down to a 50%. I mean, it's going to bring everything down by a lot. But a bear market with this kind of valuation, and when a bear market comes, then everything doesn't get justified like for whatsoever. Doesn't matter what you report. Companies are just getting killed. Now, some risk. Trump is going to try to bargain like you know technology exports to China, even though they do it in some level. I think they can only sell only the outdated chips and not the cutting edge. The cutting edge they're keeping them for the allies. So if that list of the sanctions grows, that's a potential risk.
That's a risk from the demand
Yeah, I
side,
mean,
right? But there's also the risk from the production side where China might also put some restrictions on critical materials that Nvidia needs to produce its chips, or that TSMC actually needs for its foundry.
the biggest chip risk is China invading Taiwan.
Yeah, number one, geopolitical for
That's
sure.
number one. If China invades Taiwan, then every semiconductor company just getting cut in there.
For sure. TSMC, Nvidia, all of the big names.
All of the big names, and
AMD,
also
you can name them.
Supermicro is going to be delisted. Is that what I'm hearing? What I'm hearing, guys, or it's just rumors?
So the Supermicro, so right now they're still sort of undergoing, so they had some issues with their accounting,
Yeah.
right? They didn't file their 10K in time, which is their yearly report. And this is a big issue, big no-no with it, with the
And
exchanges, because you got to be in compliance.
the auditor of PwC resigned also, which is a huge
Correct.
red flag.
Claiming that it was a mess. Yes, claiming that it was a mess. So it doesn't give you a lot of confidence. But then the question goes down to this, right? It's, do you believe what the board is telling you, which the likelihood is that they are telling the truth. In the Nvidia earnings, they did get mentioned as a partner that is working with Nvidia for the future of Blackwell. So that was something that gave me a little bit of trust, because if it was that bad, they would try not to put their name associated with them. And also the fact that they've been in here before. So I'm sure that there is knowledge on how to come out of it, because they've been delisted in the past as well for accounting errors too. So I think the timeline for this plays out as this, right? They already filed an appeal to extend their deadline. The Nasdaq has officially filed the motion that says that they are out of compliance, and hopefully within the next couple of months, hopefully by the end of February, we'll know whether they get delisted or not. Now, the risks of them getting delisted come to the fact that it's like, if they get delisted, a lot of debt that they have gets called out at once, which could put the company in jeopardy. So maybe a potential buy from someone. So that's an interesting one for sure. But again, it's a very risky play. I would say, like, if you're looking at SMC, if you believe the numbers, it's a great value company right now because you're not getting the AI multiple, right? But if you don't believe the numbers and don't believe the board, then you're running into issues, right? So it's a matter of trust in this case. I do have a position, just to let you know. I have an option to play it on it.
Look, it depends on your risk appetite, and I think having an option makes sense, not owning the stock directly. But I personally, I'm staying completely out of it because when I see accounting errors and the auditors resigning,
Yeah.
I say pass. I mean, there are other opportunities out there. I mean,
There's Nvidia.
just buy
There's
Nvidia.
Nvidia.
I was just gonna say it. You took it from my mouth. You'll be fine.
Great minds think alike.
Yeah. I mean, that's the question that
Hey,
I mean,
by the way,
I think the
this
resistance is going
that's
to be rough.
Supermicro, right now. That's Supermicro. I'm just saying.
Sure.
Sorry, Dimitri, go ahead.
So the risk on Nvidia now, the price, I'm talking about the price now because I believe not a lot of people are just looking into the details that we just mentioned about, estimates and revenue and what it could be and what it would be. And a lot of people just have like a simpler way of seeing this. It's just the price action and that's it. And combining that with the enormous market cap that it has, and is larger than Microsoft, and Microsoft is quality. I mean, it doesn't get better than Microsoft, okay? They deliver like earnings like clockwork every single time, and they have their hands in so many things, including OpenAI, okay? And with a 65 billion in revenue per quarter, they have a smaller market cap than Nvidia that has half of the revenue per quarter. So you don't have to dig too much to start questioning, okay, how high this thing can go up, even though all the fundamentals are pointing that it should go up further. I'm not arguing with you guys. The fundamentals are correct. It should go up further, but I think it's just a mental, the psychology part of the market that is going to keep it until we get a further catalyst, which I don't know what it could be. Like at the moment, what is going to push it, and then once it starts pushing it north, and then it's going to get even more crazy. That's
Yeah,
my
that ChatGPT moment. That ChatGPT moment for AI is what I'm looking for, right? Like, what is the next thing? Which I think it's gonna be robots. You
I
know,
think
like
so too.
the Optimus is the thing that's actually gonna be like, okay, like we're gonna need a ton of chips to make these robots work. You know, it's and I think it's coming within the next 6 to 12 months. Like I don't think we're far away from a. I heard some rumors that the Optimus Tesla robot is already in product, like in actual doing work in the Tesla assembly line. So
I think I saw one playing with. I thought I saw one hanging out with Kim Kardashian. Isn't that
correct. Yeah.
they went out on
Yeah.
a date or something like that? So
Yeah.
they're out there.
But
No, like
not
and the amount of compute we're gonna need, it doesn't stop. It just doesn't stop. Nvidia has that cyclicality that we have to take into consideration because that
Yes.
cyclicality is real. But with this new cycle, I think that cyclicality just got expanded way more, at least for the initial rally, which is just we're building a new technology, a new iPhone, something new. So
let me
That's an
put
interesting point.
let me put one cube in this boiling water. There's a new set of risks, right? When a company becomes so big, you mentioned
Mm-hmm.
Microsoft is a no-brainer, and Nvidia has become now a no-brainer as well. Alphabet was also a no-brainer until the court, the U.S. Justice of Department, decided that Alphabet became too big to continue, and it had to be broken in pieces, and they strongly recommended that Alphabet should sell its Chrome business, so its search engine, sell its Android business. And
Mm-hmm.
unfortunately, Alphabet, if it breaks into parts, is not going to be as interesting. Alphabet is interesting because it has all this data from the search engine, from the Android, from the different platforms, from YouTube, etc. And I think we may have the same, maybe rumors starting to come in Nvidia. If Nvidia powers the world, powers all the robots, powers all the computers, powers all the devices of the government, powers everything. There might be powers even the tanks, the missiles, right, in the defense sector. I think that can be a huge risk, and there can be an administration, maybe not the Trump Vance administration, but maybe the administration will come after, or but anyway, it's a risk that you have to keep in mind, that
Yeah,
Nvidia might be forced to stop growing, basically, you know. So it's something to keep
that
in
could be the
mind.
case. That could be the case. The antitrust is always like the bigger risk of all, especially for those large companies. I mean, Microsoft went through it in the 90s, and they lost a decade of productivity and innovation because of it. But they ended
Yes.
up like settling like for a large amount of money. And I think Google also, if it gets to that, I don't think Google is going to get broke down. I think they're gonna come to an agreement in courts, and they're going to pay like a really large fine, or just Trump is going to just throw out the whole thing. Because once Trump takes over, then a new Department of Justice head comes, like a new
Correct.
appointee comes, and that appointee might be a Republican and say, you know what, this is free market, let them do what they do. So
Let them fight.
let them fight. And the 5% drop yesterday wasn't convincing that it was like too much of a risk. If he was 15, 20, I would say, okay, there's something there. Yesterday, it wasn't convincing to me. I didn't buy it, but it wasn't convincing. But the risk remains. And that's the risk that we have to look for companies, you know, like we're just speculating that it's not going to happen, but you never know that if it might end up being the case.
Yeah, but government has been there always, right? Like the risk of big government has always sort of like gloom over these big ass companies, right? So, and I don't think it goes away anytime soon, you know? It's just a matter of whether they can actually fight it out in court and then who has the best lawyer.
They find the target and they just say, okay, so this decade is Google and next decade is Amazon, and I guess that's how it works, and they want to show off that they're trying to control the big companies with regulations and with fines. But yeah, I don't think there's anything there with Google just yet. But we're gonna know when the market opens today and how that goes.
Yeah. It'll be interesting. A couple of the risks that I saw when it was during earnings time, and it was the margins drop. You know, it's understood that the margins right now are supposed to come down as research and development and everything comes into play. But the one thing that sort of, you know, one of the questions that really lit up my light bulb during the earnings call was, okay, by when do you think you're going to get the margins back up again to 75 and higher? And they said, okay, hopefully by halfway through the year, we are coming back to those levels. But the big question goes down to this, right? If Nvidia is making so much money from the design of the chips, because that's mostly what they focus on, what happens when TSMC is like, okay, I want a bigger piece of the pie, right? And they're going to take it from who? From Nvidia. And they're going to say, okay, I'm making the chips. You're going to have to pay me more. You're going to have to pay me more. And then all of a sudden you see this transition of margins, and then you see that reduction of cash flows, which could affect the price of the stock drastically, because the earnings per share being so high right now are in direct relation to the fact that the margins are so high. So that is one thing that I'm paying very close attention. And in future earnings, I don't want to see it drop from the 70s at all, from the 70%. And I potentially want to see them even start getting high quickly as Blackwell starts to ramp up. And the other risk that I see is competition. Like Nvidia competition right now, every single CEO has a picture of Jensen in their office with darts.
Yeah.
Trying to hit it because they're trying to take that kid's meal or that kid's lunch so fast. You know,
But
it's like every single person.
Does Nvidia really have competition? Can any chips compete with Nvidia?
Not right now. No, that's the thing. I don't think they can, and I don't think they can because
Intel.
I think the strength that they have is the supply chain.
You remember Intel? Intel was like, all right, we're gonna be the new Nvidia, and then you see what happened and the amount of costs they incurred. I mean, right? They shot themselves in the foot. I'm not saying it's not possible.
That wasn't
Of course, it's possible that, AMD or take some market shares, but I think the risk there maybe is still moderate, on the competition side. What do you think, Dimitri?
Yeah, the risk of someone catching up is always there with whatever the industry, but I think in the short term, let's say the next 12 months, I don't see anybody catching up. In the next 12 months, maybe in the next 5 years, someone with deep pockets, because you're going to need someone with deep pockets to throw a lot of money into research and development to come up with something even like at the level of Nvidia. And then you're going to try something new. You're not going to go with the tested and already tried product with Nvidia. So they have like a significant advantage, and that's their mode basically. If you want to use like go ahead.
But sorry, I don't mean to interrupt, but maybe not perfectly synchronized. So Nvidia has a business mode, but let's imagine that other companies gain market shares from Nvidia, so AMD, Qualcomm, etc. They win market shares. The sector is expanding just so quickly that Nvidia can continue growing super quickly even by losing market share. It continues gaining market shares in an expanding sector, and that's why it's up 600% in 5 years. But it can afford to lose even market shares because the sector is expanding and all the chips are welcome, even the ones that are maybe lower quality. It can happen that, in the future production, maybe Nvidia's chips will, it can happen that for a year or two, the chips are not going to be of the same quality for whatever reason compared to some competitors. But because the sector is expanding so much and everyone is just any chip, literally any chip that's out there except the Intel chips, if you see room for growth there.
I have a question for you guys. Do you guys think that the semiconductor sector is a cyclical sector?
So it used to be, sorry if I can take it first, maybe. It used to be, in my opinion, and I think it's not anymore. I think it became the defensive sector by excellence. It's a defensive sector in the sense that demand will not fall at all from here, and it all depends on the supply to support the growth. So if the supply doesn't support growth, it's at least a defensive sector. For me, it's a defensive and growth sector. It's a combination of the two. It's not anymore cyclical. So I'm very bullish on the sector. I think Nvidia will not forever be the leader because it's a tech sector, and in any tech sector, the leaders change every decade. There's a new leader. In general, I say for tech sector, for example, cybersecurity or whatever segment you choose, don't hold the stock forever. I mean, hold it as long as it's the leader, but it's possible that one day it's not the leader anymore, and you need to be ready to shift in case that changes. Well, what's your opinion, Nestor? That was a fantastic question, actually, from Dimitri.
For me, yeah, like I think it was. I agree with you that it was, and I think that if we believe Jensen and if we believe that software has just changed drastically and we're going into a new software sort of revolution and the new industrial revolution, then I believe in the cyclicality, but we're still trying to figure out what the cyclicality is going to be because we still got to build the infrastructure. But because we're still so early in the curve that the amount of chips that we're going to need and like the amount of competition is insane. Like I was listening to Zuckerberg speak about Llama. The Llama model, for example, and they're saying, okay, like yeah, we made Llama with 100,000 chips. Now I want to make the next Llama with 1 million chips, and not the 1 million chips of the H100s. No. I want the B100 chips now. So I want the new chips, and I want as much as you can give me to create the new models, the new infrastructure, like the amount that it takes. I saw a video from Linus Tech Tips. I'm going to send it to you guys, and I'm going to put it in the comments below. They're insane. The level of thought that goes into like making a data center is like this data center had to be built off like 1 meter off the real foundation of the street to have security. The way that everything connects, like it's financial markets are through data centers right now. Like everything runs on this like imaginary network that we never see, right? But it's there, it's running the internet, it's running those services that we are so accustomed to, and then we have to upgrade that to something that is higher compute, higher power. So we're trying to figure out that cyclicality, and Nvidia is allowing us to see that, because we're going to see right now they're trying to sell everything they can, so demand is higher than supply. But when those two forces become balanced, we're actually going to realize that cyclicality again, which could be 10, 20, 50 years. We don't know that because we're building it, so I do believe in its cyclicality, and I believe it's going to happen at some point. But if we're building as much chips as I think that we are, it
used to be cyclical because the chips used to power phones and laptops and those devices that the consumers were buying when the times were good, and that the consumers were not buying when there was a recession, right? But now the chips just power absolutely everything.
Yeah, that's also my point. That's also my case. That until 15 years ago, it was powering the high-end stuff, the phones and the computers and the laptops and all that. But now everything has chips in it, and that made the semiconductor sector into a secular bull market. And we continue going from here. Also, the semiconductors are technology, and technology becomes obsolete really quickly. So you need more of them. And you need better, like bigger, faster, and all that. I think the semiconductor sector is in the secular bull market, and it's gonna go like it's gonna have the booms and busts like with the market. It's not gonna be cyclical based on the business cycle. So yeah, that's
Absolutely.
so we all agree that it's not cyclical anymore. That's good.
That was the bottom line, right, in this show. Nestor, you want to wrap it up? You have some quote or something you want to share?
Here at Market Buzz, we tell you the rumors before the rumors get you. No, but it's like I think we've pretty much touched on a lot of topics. Interestingly for next episode, we're gonna be paying attention to the Bitcoin price. One thing that just to note at the end of that, it's have you guys keep a close eye on Palantir earnings, how they're blowing up, because I think that's one of the true AI plays right now. AI, like Palantir has been AI before AI was cool.
Mm-hmm.
So Palantir's revenue growth and client acquisition is growing to such a scale that's going to tell you the next phase of this cycle heading forward into this, right? Because Nvidia is the start of the AI revolution. The question is when does the dot-com bubble or the AI dot-com bubble happen after the chips are built in and the real infrastructure comes. So I think that's the next cycle, the next part of this era. So Palantir, very interesting stocks. It's something that we have to talk about for sure.
Can I ask
in
a
future episode. But I think we've wrapped it up.
You guys have to answer in a few words. I want to ask a little question. Nvidia or Palantir, which one would you buy now if you had to buy one of the two? Nestor first. It's a difficult one, right?
Nvidia. I would say, look, I would say 90% Nvidia, 10% Palantir.
After all you just said about Palantir, what about you, Dimitri?
Yeah, no, but I would put 10%. I'm keeping a close eye. But again, this is the dot-com era rally. We don't know who's gonna make it. So I would say right now, I'm keeping a very close eye on them. And I would put the 10% position. But right now, they're too expensive. So that's the reason I don't buy right now, because they're too expensive. So I want to understand their valuation.
Yeah, I'm gonna have to go with Nvidia as well, even though I wouldn't buy that at this valuation because I already have it. But between the two, even though none of them are easy to understand, especially data mining, whatever that means. And yeah, I mean, I'm just being honest. Nvidia, at least I understand what they do. Palantir is like a bit, and I haven't looked into it. Yeah, it's very exotic, and I haven't looked into it. I only know the guys that started the company. You know, they are like from the PayPal mafia. They are all the people from PayPal. They are an interesting group. Whatever they start is usually turns into gold. But yeah, I would choose Nvidia here.
Yeah, same for me for the reasons you just said. I think Nvidia is a good play now, and Nvidia is cheap. I mean, from a risk-reward ratio, I'm saying Palantir very high reward but very high risk. Nvidia, in my opinion, very high reward also, but lower risk.
For sure. So let's finish it off really quickly. Now that all our thoughts and things, are you buying more Nvidia for your portfolio? Are you selling, which I'm guessing none of us are, or are you holding?
I go first. I'm not buying anymore, but I'm getting really close to just taking a little bit of profits. Maybe like selling 10-15% of it, just keeping it under control within the portfolio. Because at the end of the day, we have to do some risk management. It's not just buy one company and then you're gonna get everything from one company. That's not what we do. I'm not buying, but I'm getting ready to just take some profits.
In my case, honestly, I'm not able to sell it because when I have a good company in my portfolio, I just cannot sell it. So I'm not selling it. I will buy if there's a dip. I was actually hoping there would be some kind of irrational dip on the last earnings, but it didn't happen. It's flat. So if there's a dip because of whatever news or some stupid news or some Japanese carry trade or something like that, then I would add more. But for now, it's a hold.
Okay.
And you?
For me, I agree with Dimitris. I wanna take off some of the table, but I don't want to take off some of the table to sort of diversify. I want eToro, and this is a message to the eToro people here. I want them to put the leverage ETFs. I want NVDL. I want NVD. I want the leverage ETFs. Allow me to trade Nvidia because whenever we see a massive drop, like if I see Nvidia 95 again, like but the house, the car, the dog, selling them all and putting them in Nvidia.
So wait, the other night during the live stream, I asked you how you're playing Nvidia, and you said you own the stock, you have 2x leverage and 5x leverage. What was the story?
X. I have 2x and X. I have positions on the X and the 2x. When the stock all of a sudden, because of geopolitical things, anything that makes the stock go down irrationally, buy the 3x. Hold it for 2 weeks, boom, 15% of that trade. So eToro,
You know
get
what
them
to
leverage
do.
ETFs up on there. For sure. Well, I think that's it. I think that's a wrap up, guys. Hopefully, let us know in the comments below if you have any questions that we like to answer, that we can answer. Also, check out our portfolios in the comments below because we don't only talk about it, we actually trade and show you every single move that we make. So,
And don't forget to leave a
stay
rating
beautiful.
on Nestor's leather jacket.
Yes. Comment. Who wears it better, Jensen or Nestor?